Defensive stocks actually are known for their stability. They are stable, you know, and they are consistent when it comes to performance, especially during economic downturn. And so we want to look at 10 key characteristics of defensive stocks. We've spoken about common stocks. We've spoken about preferred stocks. We've only made the video on cyclical stock. This time around, I want to talk about defensive stocks and the key characteristics, the key attribute, the key features of defensive stocks. Number one is stability. Defensive stocks tend to be more stable. They have stable earnings. They pay stable and regular dividends during economic, downturn. Compared to other stocks in the market, they do relatively well when it comes to stability, dividend payments, because the essential nature of the goods or services they provide. They provide services that are kind of evergreen. People tend to buy, their nature of services and the kind of goods they provide, year in, year out, regardless of economic performance. And so that makes them to be relatively stable compared to other classes of stocks in the market. Number two, low volatility. They generally exhibit lower price volatility compared to cyclical stocks, making them less susceptible to market fluctuation. They don't fluctuate as much as other classes of stocks. They don't fluctuate like cyclical stocks in particular, because they don't really correlate that much with economic cycles or economic performance. They don't fluctuate like other stocks. They're not as volatile as other classes of stocks in the market. Number three, essential goods and services. Defensive stocks are often in industries that provides essential products or services such as utilities, healthcare, and consumer staples. In these particular industries, their services are like essential. Whether the economy is doing well or it's not doing well, people will still demand utilities. They need to have their electricity, their gas, and everything. Whether the economy does well or not, people will need to access health care. And so these defensive stocks actually, they are essential to human existence. Number four, consistent dividends. These stocks often have a track record of paying consistent and reliable dividends, providing steady income to investors. Because the nature of their businesses, they tend to attract income. They tend to attract patronage despite the performance of the economy. And so because of the patronage that they attract, you discover that and they're able to do very well to the point of being able to pay regular, consistent dividends compared to other classes of stocks in the market. Number five is resilient demand. Resilient demand. The demand for the product or services offered by defensive companies remain stable regardless of economic conditions. Their products are always in high demand. Their services are equally in high demand. Whether the economy is doing fine or is not doing well, people still demand their service. People still demand health care. People still demand, electricity, internet services, waste management, supply of gas, and all those things in our homes. So their services and products are always in high demand. So that resilience in demand. Number six, strong balance sheet. Defensive companies typically have strong balance sheets with lower level of debts, and thus contributing to their stability and ability to weather economic storms. They usually have very strong balance sheet, low debt, lot of cash, you know, increased sales revenue, and very strong balance sheets. So all these, fundamentals make them very stable, quite safe for investors who desire safety, for investors with a lower risk tolerance. Number 7, lower beta. Lower beta. They usually have a lower beta, indicating less sensitivity to market movement and reduce risk compared to the overall market. Beta here means a company's reactivity or sensitivity to market movements. If a company has a lower beta, it means that the company is not very sensitive to movements in the market. If it has a higher beta, it means the company is relatively sensitive, highly sensitive to movements in the market. So in this case, defensive stocks have what? They have lower beta. Number 8, long-term growth. While growth may be slower compared to cyclical stocks, defensive stocks often provide steady long-term growth. Though slower than what is obtainable with cyclical stocks. Cyclical stocks grow faster, and of course they equally descend, they equally lose steam faster. But as it relates to defensive stocks, they have slower growth, slower but kind of consistent growth over the long term. They are steady, they are stable, but the growth expectation is like slower than cyclical stocks. Please subscribe to this channel and give me a thumbs up. Equally comment in the comment section. Share this video and press the notification bell. It will do me a ton of good. Number 9 is predictable revenue stream. When it comes to revenue from defensive stocks, it tends to be more predictable as the company's product or services are consistently in high demand. So you can very easily forecast, you can predict the level of revenue, or, you would like to see in the coming year. So their revenues, are very easy to predict compared to other classes of stocks. So with a predictable revenue, you can equally easily predict the earnings, all things being equal. And so you have a better information at your fingertips while investing in these kind of stocks. Number 10, less impact from economic cycles. I've earlier discussed this. Defensive stocks are less impacted or affected or influenced by economic cycles, making them a safer choice during periods of economic uncertainty. So, generally speaking, they are less affected by economic condition or economic movement because of the nature of their product and services, which tend to be in high demand consistently. They are not really affected by the economy. These characteristics makes defensive stocks a popular choice for risk-averse investors who want regular income, who wants to have that dividend coming in regularly to cater for their kind of lifestyle.